Hey YouTube, what's going on? It's Patrick with VectorVest once again with the much anticipated GME update. Last time I got a GME video out for you guys was before their earnings statement that they had last week. I was out of town, but I promised you guys I would give an update after the statement was released. Well, it's been released. It's been about a week now since that point. So if you're hyped for GME, make sure to hit that like button, subscribe, and turn on notifications so you never miss any of the amazing content that we have coming for you guys. With that, let's get into it. All right, welcome back. So before we jump into the chart, I just want to update you guys for anybody who hasn't really paid attention over the last week or so on the updates and the news that's come out over the last week that has a big potential impact on GME. So first and foremost, let's talk about the earnings call. Well, they beat estimates by about 50%. Everybody was expecting them to lose about 83 cents a share. They lost about 45, so way above analyst expectations. That's a great sign for a company that's trying to get back on track, getting themselves positioned to have a great future. Love seeing that. Good job, GameStop. Let's keep it going. Second item that we want to make sure everybody is aware of is a statement that the head of the New York Stock Exchange made himself just a couple of days ago, stating that the price of GameStop and AMC may not actually reflect the proper pricing for what it should be due to the dark pool trading. This has been something that has been theorized for months now. Everybody's been talking about it. And to have the head of the New York Stock Exchange finally address this and make a statement on it is huge. That shows all the research that's been done, all the DD that's been done is correct, and also we're on the right track. So shout out to all the fellow apes out there doing a phenomenal job, doing some research on these topics and finding this information out to help us all become smarter apes. And finally, third is the big news that just got released that GameStop is now going to be entering the Russell 1000. So I have some mixed thoughts on this. One, I'll address right now, which was the article that came out yesterday talking about there's going to be a net selling on GameStop more so than a net buying. And that's because they were a bigger portion of the Russell 2000. All those shares are going to have to be sold out from that ETF. And then the proper percentage based on market cap would have to be bought for the Russell 1000 to be added in. So because they're a smaller portion of the Russell 1000 based off market cap on May 7th, there will be less buying going into the Russell 1000 ETF and more selling coming from the Russell 2000 ETF. So overall, a net negative, but that's okay. Doesn't really change our thesis that much at all, really. One positive sign that I do see coming from that is the fact that there's been a lot of talk about how they manipulate the ETF, specifically the Russell 2000 ETF, to specifically short GameStop. If anybody's not familiar with this theory, essentially what they do is they buy a bunch of the stocks that are in the Russell 2000 and they short the Russell 2000 ETF, IWM. And therefore, when they short the Russell 2000 ETF, that pushes GME down, but everything else stays the same because they're buying the other shares to keep them afloat. So they're staying net neutral on all the stocks except for GME, which forces GME lower. Well, since it was a major portion of the Russell 2000 ETF, it did have a big influence on it. But now that there's a smaller portion of GameStop in the Russell 1000 because of market cap, if they try this same type of an approach, one, they're going to be having to buy some of the biggest tech names out there to try to stay net neutral on that trade. And two, because it has such a small percentage in that ETF, that same type of an attack or that same type of trade that they've been using to manipulate the price will be less effective because it's not as much weighting towards GME, which is a great sign if you're a GameStop bull. Okay, so those were my thoughts on some of the big headlines over the last week and a half. Now let's jump right into the chart here. So as you can see right behind me or right above me, we have the 6-month look of GameStop. That way you can see that first run up we had in January, the pre-run up essentially, or the testing phase, and then everything that's happened since then. because that's really been where the main story has happened or come from. So as we can see, we have two levels of support and resistance that I want to point out. The one level of resistance is around 275. It was a struggle back here in January. We had a lot of volatility around that point. We got above that point around mid-March, came tumbling back down to close right below that level. And then we broke it again just right before the earnings statement, and then came tumbling back down after earnings, which was kind of a surprise to see a company beat earnings and then see the stock price drop as much as it did. But hey, I look at that as a buying opportunity, so buy the dip, right? And then all of a sudden, after that one big day, we've just kind of been consolidating here and holding above that 209 level of support. Well, where does 209 come from? Well, right before that big gap up that we talked about last GME update video, we closed right around that 209 level, then gapped up and took that run up to about 350. So I'm using that because that's the gap. So I'm looking at that, trying to fill the gap, which it has. And usually after it fills the gap, if it finds support and that support can hold, you get a nice bounce off of that point. Well, let's go ahead and just zoom in real quick. You can see pretty tight trading range over the last few days. And even right now, we're still holding that 209 threshold. 3 and 8 exponential moving averages are still negative. DPO's pulling back a little bit, but still in positive territory. And then looking at stochastics here, we are in oversold territory. So that quick sell-off after earnings has actually got us into a nice oversold territory. Now, as I always state, just because it's in oversold or overbought territory doesn't mean that it's going to instantly go the other way, but definitely something you should be aware of if you're trying to find a new entry to get back in. Wait to see for that stochastics to start coming back above that level of 20. But if we look at historical data, because that's really all that we have to go off of to try to make predictions for the future, we can see every single time over the last few months, we've hit that level of 20 once, twice, and now 3 times. Those times have been short-lived and start the beginning of a new uptrend. So hopefully history can repeat itself. Hopefully we don't stay down in these oversold territories for quite too much longer. And if we get that sign of stochastics starting to come out of that oversold territory above the level of 20, definitely a positive sign. We also want to make sure that this level of support at 209 can hold. And if we can get a bounce over the next couple of days, I'm definitely going to keep my eye on that 275 resistance zone to see if we can get above that and consistently hold above that as well. And one other thing I want to talk about with this 275 level, if we look at it over the last 6 months, throughout that pre-squeeze we had in January, throughout that run-up we had in March, and throughout this most recent run-up, we've only closed above that 275 level 1, 2, 3, 4 times. That is not very many times. There is clearly a strong level of resistance around that 275, and there seems to be something maybe that we don't quite know yet. There may be forces working behind the scenes to keep it below that threshold, because every time we start to break above it, we seem to pull back. So if we can get a little bit of momentum build up, especially where we're at right now, where we're pretty close to that 275 level, we get a little momentum going into that, we could break through, close above that, hold a nice strong green candle above that point. You could definitely see a lot of FOMO starting to occur, a lot of new people jumping on board, looking for that opportunity. They see it starting to run, they see it closing strongly above that 275. Expect to see some people trying to jump back on board at that point. Also, another positive sign is you do have volumes drying up a little bit here, which some may look at as a bad thing, but I look at it as a positive because as we've just looked at, we have some consolidation right at 209, and also volume is drying up, telling us there's not a whole lot of selling pressure still going on, and maybe somebody's building up some extra reserves to jump on board to help push it even higher or to help get it going off of this 209 support floor. So with that, let me know your guys' thoughts in the comments down below. What you guys expect to see from GME next week? Do you expect to see some more sideways trading, which we're all pretty accustomed to already? Do you expect to see a big upside move? Or do you expect to see it break that 209 support and move lower? Don't just answer, let me know why you think that as well. I want to get that conversation going because I want to understand everybody's perspective to get a full scale of what this stock looks like, not only to a bull like me, but the bears even out there as well. And finally, one last thing I want to highlight, something that hasn't happened in a long time, and that is looking at earnings per share. Now, we all know the earnings per share, everybody's expecting GME to continue to go lower and their earnings continue to get worse. Well, that was the original thesis, but all of a sudden you had a beat by almost 50% that they announced during that earnings call. And now look here, we have a bump up in earnings based off the VectorVest EPS. And if you're new to looking at our earnings, I'll always talk about it. Earnings is the engine that drives stock prices higher. We firmly believe that rising earnings leads to rising prices in stocks. Our earnings per share is different for the sense that it not only looks at just the historical data, but also takes into account major analyst projections over the next 12 months. So when you see this uptick here, that shows not only did they beat their estimates, but analysts are starting to change their views and starting to raise their estimates as well. And if big money's starting to raise their estimates, expect to see that price continue to move higher, especially now that we're in the Russell 1000 and not just the 2000s. So we're going to head with some of the big tech giants out there. That's going to be it for today. Once again, I hope you all enjoyed today's update. Thank you for tuning in. Take care, adios, and I'll see y'all on the moon.